Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
It's quite gut-wrenching actually for those who hold mid-cap stocks in their portfolio, because the cut is just getting deeper now. The mid-cap's down more than 1% and almost 1,800 stocks on the declining side. But what should you do? Ashwani Gujral and Sandeep Wagle join in. Ashwani, we just spoke to you a while back on the index itself, but what about on individual stocks? I mean, are there any trades either on the short or on the long side at the moment?
See, ICICI Bank in the last 2 days has fallen 25 bucks from 300 to 275. Now that's not how large stocks fall. So maybe something is coming from there which the market has a whiff of, because the markets were stable while this was falling. So my sense is that there is further to go. PNB is also broken down. So PNB is a sell with a stop of 80. Target of 72. ICICI Bank is a sell with a stop of 282, target of 270. And HUL you can still buy with a stop of 1630, target of 1675. And these corporate banks are the ones which will come under pressure because of this inflation, etc., and whatever RBI report has said. So chances are they could outperform on the downside.
Right, Sandeep Wagle also joins in. Sandeep, good afternoon. What are the stocks you're looking at?
Good afternoon. I would go with a sell in a SREI Infra, stop loss of 69, target of 57, and a sell in a Syndicate Bank, stop loss of 43, target 36.
In fact, a lot of PSU banks are under pressure this afternoon. Not just Syndicate Bank, but names like IDBI Bank, etc., have also moved to the low point. Now down almost 7% for IDBI Bank. Ashwani, does it make sense to short any of these names? I mean, I know PSU banks is not really a space that you've liked to trade in the past, but at the moment, anything that you would do here?
See, the problem is that after 3.5% downside, it's not the best point to short, because at least your stop is 3.5 points higher. But what's now happening is that RIL has started fresh downside. So maybe I would look at things now where there is been some outperformance on the upside, and now they start to people start to book profits out there. So maybe even look at things like Bajaj Finance or Finserv, because if rates are going to be raised, all of these guys get impacted. So try to short an RBL Bank, Kotak, these sort of stocks where there is some juice left.
All right, gentlemen, thanks very much for your trading ideas. The European markets have opened, and actually it's a bit of a relief. So the FTSE is actually seeing some bit of green, and France, which is the other market to open, has opened just about flat. So the kind of hurt or pain that we were seeing in Asia, not really reflecting in the European markets for now, though the Dow futures continuing to point to a lower start there. A quick break. We'll be back with more in a bit. On the other side, we'll also hunt for value, and we'll talk about Sun TV. Is it a value pick yet, or is it a value trap? Details lined up next. Welcome back. Well, it's a market where there's quite a bit of pain that's going on. So really, all everyone wants to do is hunt for a little bit of value. So today we focus on a stock which is a leader in the media space, Sun TV. Remember, the stock, of course, has lost 26% from its 52-week high. Mangalam is here to decode his research on the stock, and then, of course, make up your mind on whether it's a value pick or a value trap.
Now, the stock on my radar today is Sun TV. It has declined about 12% this month, lost 25% of its market cap from record levels in Jan 2018. So what could have spooked this fall? Well, the first one was the continued loss of the company's share in TV channels, or their share in the TV channel's core market, which is Tamil Nadu. This is something that spooked the street. Remember, at the start of June, we saw numbers of almost 40%, which was a record low, and that recovered to about 44% as we speak. Analysts believe that this loss has come in from sustained competition from Star and Zee's regional offerings, which are about 40% of the market share. This is the key reason for the decline. Remember, this decline has led to a fears of lid on the pricing power of the company and lower than expected ad revenue growth, which after a spate of disappointment only recently has shown some sort of improvement. Remember, earlier it was showing a decline for a few consecutive quarters. So after this 25% decline in the company's share price from the record high, here are a few possible triggers that could perhaps reverse this trend. The first one, the company is tweaking its business model from selling slots for content to commissioning content, and a successful transition like that may perk up their ad revenue going forward. Secondly, benefits from digitization in Tamil Nadu are visible in their increasing subscription revenue growth, as well as the management commentary for the same. Remember, after the fourth quarter results, they said subscription revenue growth can grow up to 20 to 25% in FY19. The IPL business, the management expects that to turn into profit. Remember, they made a loss of 22.5 crores on the EBIT front last year, and this year, with the business model for IPL changing, it could enrich the company's EBIT by about 100 to 120 crores. That is what the street is estimating. The street will also watch out for Sun TV's performance in the new Tamil general entertainment channel that they've come out with, as well as their foray in other regional markets. Add to that, they're also producing a movie with Southern cinema behemoth Rajnikant, and while some brokerages have recently reduced their likeness for Sun TV, 7 still recommend buying into this stock. It will also be very interesting to see how the valuation differential between of about 30% plays out between industry leader Zee as well as Sun TV, especially given the fact that the stock is politically sensitive, as well as this is the election year that we are going into ahead of 2019. But before I wrap, a quick disclaimer: this is not a recommendation for one to buy or sell the stock, just some research that I put out.
Well, the index is still down over 1%, the mid-cap index that is, and the frontliners, the Sensex is now inching towards a century on the downside, and the Nifty is down about 50 odd points or so. But let's get a channel check on what's happening on the ground. A check suggests that AC or air conditioner sales have been quite tepid in Q1 owing to the earlier than expected rain showers. But is this a trend? B. Thiagarajan, the joint MD of Blue Star, joins in now to chat about the outlook for FY19. Mr. Thiagarajan, good afternoon. What's the feedback that you're getting? Could double-digit growth be off the table, at least for a while?
In fact, I think there will be negative growth. I don't think there will be less than 10% growth at all. In the month of April and May, the report suggests that there would have been around a 20% degrowth in the marketplace. June can make it up because Maharashtra, Gujarat and Northern India did well in the month of June, continues to do well, another 2-3 days to go, and still it cannot post growth in Q1. Having said that, I continue to maintain that the overall market growth will be 10% at least, because in the past 7-8 years, given the penetration of air conditioners, which is just less than 5%, consumer spending story continues. You take two-wheelers, four-wheelers, FMCGs. I think eventually the market will grow. But Q1 is not going to be a growth quarter for the market at all.
Wow, that's quite candid, Mr. Thiagarajan. So Q1 expected decline actually in the AC space. But what about the company itself, Blue Star? Could you see some growth, or do you expect it might be flattish?
Q1 will be just touch and go kind. I think the month of June is better. But overall, given the impressive performance we had delivered last year, I think we have to reconcile to the fact that it will be a quarter in which room air conditioners will be growing negatively. So I don't think it is going to be a good quarter for room air conditioners. On the other hand, packaged air conditioning or the refrigeration products, they all are doing well. Even though summer was not that great, these product categories are doing well. But then you remember we started the year with the hope that the market will grow in Q1 by 20%. Overall, in fact, at some point of a time when the heat wave alerts were coming, we thought that it will be a 30% growth quarter. Overall, full year can be even 20%. But April-May rains washed out that particular hope. But then if you're in this business, you should be prepared to face this. So I think overall at the year end, we will do better than the market. You know, like for example, April month, it was reported that the market degrew by some 17%. We had done better. We had degrown only by around 12.5% or so in the month of April. So we will do better than the market, but I think at the end of FY19, room air conditioners market would have still shown growth. That's my anticipation at this point of time.
Okay, so despite the slowdown that you've seen so far, you would still maintain a 20% revenue growth target for FY19?
In room air conditioners category, full year outlook of revenue growth, I will scale it down to, you know, we had said that if the market is growing by around 15%, we should grow by at least 20%. But I have a feeling that the market, if it grows by 10, we still have a hope to grow by 15%.
Right. So what about the margin trajectory then, Mr. Tyagarajan? Are you confident on that space? What about market share? I think the last time we had checked, it was close to about 11.5%. What's the trend now?
The prices were to go up by July 1 because of the commodity prices. Our stated goal is the growth has to be profitable growth, and we should be turning out high returns on the capital employed. Given this, the price increase what is supposed to take place in July 1 may get postponed by a month or so. The entire industry must be holding stocks, excess stock of around 3 months or so. The entire industry will be having. So I do not think the price is going up. At the same time, I don't think discounting will be done because there is no headroom for that actually. And as far as advertising is concerned, unfortunately, April, May, we peaked with advertising, right? With IPL and other big spends have happened already. And I don't think advertising is something which is long term. You build the share of mind. So therefore, that is not the area to look at in terms of cost reduction. See, when you will resort to cost reduction is you have lost hope that nothing is going to happen. But I maintain it is a 75-year-old company. We would have seen several great summers, several wet summers. That's perfectly fine. We are in control of things. We will figure it out. We have always delivered results, and there may be one quarter which may be bad. That's fine.
Okay, so one quarter could be bad, but that doesn't mean the whole year is a washout. Thanks for joining us and giving us an update. So that's Blue Star saying that yes, things have been a bit slow lately, but they still stick to their revenue target of about 20% growth for the full year. We'll take a break. We'll talk about commodities. Brent crude has been surging yet again. Dharmesh Bhatia of Emirates NBD.
Well, the equity market is all red, so let's find out the colors in the commodities space. Manisha Gupta is here with a quick roundup. Hi, Manisha. How's it looking for you?
Adding most to your market really because of the surge in crude prices and depreciation in the Indian rupee. But starting with the crude oil prices first, and after 3.5% gains overnight, it's 0.5% up on your screens yet again. Clearly doesn't augur for an economy like India because we have seen crude oil prices gain up by nearly 6% in last 4 trading sessions itself. The fundamentals are quite strong as well after US pushes allies Japan and Europe to halt crude purchases from Iran and bring it to zero by the month of November or face sanctions. So this is something that clearly is adding premium to the crude. And not just the allies, it also is that US will talk to other Iran oil consumers like India, China, Turkey as they go forward. So they are serious about what they have been intending to do. Apart from that, there are outages in Canada. You have supply concerns from Libya. The demand is expected to be positive. All of that is adding to further gains in case of crude. On the other side, you have the Indian rupee, which is trading at a 19-month lows. The pressure comes in from the fact that you have the Indian equities declining, the US crude oil prices are surging, the US dollar itself is trading around 11-month highs, and most of the other Asian currencies also are trading on the weaker side. So all of that is pulling that currency down, and we did see a low of around 68.57, but from those kind of levels, we understand that there has been some selling from the public sector banks. But the important point to note is that we're just about 30 paisa away from all-time lows in case of Indian rupee. So those are important levels to watch out for as of now. Dharmesh Bhatia now joins us to talk about strategies in that space. Dharmesh, hi. Even before we go to commodities, what is your sense in the currency space and what are you doing with the Indian rupee?
I'm extremely bullish on the dollar side. If you have noticed, the dollar index is trading around 94.80, 95 level mark. It's not about Indian rupee, it's about across the currencies. If you see euro and sterling are hammering continuously, I'm expecting that euro to further decline from the current level. Eventually, Indian market also with upcoming election in the next year, then FIs definitely will start exiting at this price. I'm expecting that around 16.20, 16.30 will be the level where market will try to test. So short term, definitely importers will get a hit on the price and exporters will definitely earn some good amount of money in coming months. So hedgers will definitely come into picture. But I'm still bullish on the dollar side in coming weeks, and with crude oil surging at almost 52-week highs, and expect in Indian market, especially the country who is completely dependent on energy pack, will have some kind of hit on the dollar side.
You spoke about crude oil prices. What's your sense from here on? Because we have seen prices gain up since Friday, every day in this week. How much further on the upside can you expect the prices?
I'm expecting the market to head towards the previous high also, and I think that you can see the price reaching 80 and 72, 74 level mark in coming weeks. In domestic market, with rupee depreciating, it will be the double impact, and you can see the price heading 5100 to 5150 level mark by July expiry. So I'm very cautious on the short side. I'm expecting the short squeeze will be there very soon because the expiry is just about to be there in the international market, and the spread between the Brent and NYMEX has again widened up. So short-term momentum, I'm still bullish, and I'm expecting the market to go long for this current level also.
Okay, well, Dharmesh and Manisha, thanks for giving us the update on what's happening in the commodity space. With that, it is curtains down on halftime report, but don't go anywhere. All the market action will be taken forth on our next show, Business Lunch.